Trading Nut, episode 103.
Time and time again, actually, it costs money to enter the market. When you're in the market, you're at risk. What I want to do is I want to be in the market when I got the least risk, when I got the best possible chance of making money, and I don't want to pay the broker a load of fees, and I don't want to get slippage because that's going to cost me as well. So how do I do that? Well, realistically, I trade slightly less. I have my trades on the market for slightly longer, and that improves the ability to make profit.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. Before we start, I'd like to thank our sponsored partner for today's episode, City Traders Imperium. Now, CTI has one of the world's best funded accounts and learning platforms all in one. Get a CTI Forex funded account today and advance a step closer to achieving your personal freedom. To find out more, head over to citytradersimperium.com. That's citytradersimperium.com. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got a special guest by the name of Nathan Sage on the show. Now, I'll tell you why he's special in a second, but first of all, I just want to wrap it up. This will be the last show of 2020, and I just want to say, hey, look, guys, have a great Christmas, New Year period with your friends, your family, your loved ones. Enjoy it. 2020 is now almost over. When it's over, 2021 has to be better than 2020, right? Surely it can't be any worse than this, being locked in your house for weeks on end. Guys, let's look forward to 2021. We've got a fantastic episode coming up. Now, the guest I've got today is a guy by the name of Nathan Sage. Now, I first knew about Nathan about 3 years ago when he signed up to my Robot Builders Club. At the time, it was called Automate My Trading. It was a course where I teach you how to build trading robots. As I keep going on about, you've heard me mention it before. I teach people how to build trading robots. Now, Nathan is by far probably my most successful member of the course. Now, what he's gone on and done, you're going to hear today. He's basically become he's created a robot. Not just one robot, he's created a series of robots or EAs or algorithms, trading algos that he's managed to license to hedge funds for 7 figures. Okay, so this is what's possible with my Robot Builders Club. Funnily enough, I didn't even know this was possible until Nathan came forward and let me know that this is a possible avenue for people that come on, build an algo, turn it into something that can generate a certain return, or a return in a certain way that these hedge funds and funds want to get access to, and you can license it onto them. So it just shows you how you can look at this industry from very many different aspects. You can either look at it from purely trading for yourself and becoming a personal trader and that ultimate freedom where you've got no one to be responsible for, or even just creating your own trading algo that's going to trade on your behalf. But the other thing you can do is leverage the things that you know. So once you become good at this, you've got a skill that people will want to invest in. You become a valuable asset. And that's essentially what Nathan has done, to the point where his company is sponsoring the Trading Nut podcast in early 2021. So you're going to hear that and hear more from him then. But today you're going to get to hear his story. So this is how things can happen so quickly. It was 3 years ago. I look back at some of the emails that we sent between each other when he was asking questions about, like, simple questions about how to build, how to test trading robots, and now he's creating them, or created enough of them a number of them to sell to hedge funds on a license basis for over 7 figures. So guys, you're going to hear that story coming up. Now look, on this note, and it's the end of the year, I'm going to do a special for anyone that wants to join up to my Robot Builders Club. Now, here's what it is. Basically, if you sign up to my Robot Builders Club before the timer expires, you will get access to a $5,000 evaluation account from my sponsors, City Traders Imperium. So this is valued at £200. You get that with the Robot Builders Club completely free of charge, which is going to give you a $5,000 US dollar account to trade on, and you've got a full year to pass your evaluation. And you get whatever you earn on that evaluation. When you pass it, you get the 50% of the profits as well. So this is like a massive bonus, and they allow you to trade with trading robots. So it's a perfect synergy, right? Then if you pass the evaluation, you move on to the $20,000 funded account. So all of a sudden you jump from trading $5,000 to trading $20,000. So it's a great little offer here, guys. Go and check it out. There's links in the show notes, links in the show description, or head over to tradingnut.com and it'll be up there on the robots page. If you want to look at the Robot Builders Club, that's where you're going to get all the information. I'll do a separate video on this to explain how it works and why this is such a good deal and so much better than just trading your own capital. All right, guys. Right, let's get on with this show with Nathan. It's a fantastic little episode here. Let's do it. Trading Nut Podcast. We've got Nathan Sage with us. Now, Nathan is a ex-client of mine. Well, he is a current client, I suppose, as well, of my Robot Builders Club. He reached out to me just this week or last week and said, just want to say thanks. I've had a great run in the last 3 years. And that's why I've got him on the podcast, not just to sort of tell you about his great run, but I know he's got a lot of valuable information to share with you guys today on anything to do with, like, I suppose, automating strategies for funds, his trading career in the past, and all sorts of stuff. So, guys, this is going to be a fantastic interview. Welcome to the show, Nathan. Thanks for joining us all the way from the UK. How are things with you?
Fantastic. It's really great to be here and to actually talk to you in person.
So Nathan, as I said, he reached out and he basically said, I managed to build a robot, license it to a fund or institutions for 7-figure sum, and just want to say thanks. So I thought I've got to get him on to find out how he does it, how he did it, and it was only 3 years ago. And so we've just shot a probably an hour and a half long video for my Robot Builders Club members to go into a lot of the detail around how you actually get to the point of creating an automated strategy that you can then sell into or license to a fund and what's involved in that. And you've done this multiple times, Nathan. So today we're going to get the story, and everyone on the podcast is going to get to hear this, and then I'm sure it's going to be fascinating. So to start off with, do you want to let us know how you first got into trading and your sort of journey to date in terms of all the way up to where you are now, and we'll sort of dive into some details in that as well.
Yeah, sure. It sounds good. So my background isn't actually trading. So this is one of these things where a lot of people come to, and I was at my kind of day job, and I was thinking, this is not what I want to do for the rest of my life. What can I do that in some ways potentially gives me that financial freedom? And trading seemed to be a really good option. I'm somebody who is fairly competitive, quite like the idea of trying to trade and make money from trading. And it's something that I had to learn from the very beginning, learn how to trade, how to technically, trade the market, understand fundamentals and how the market works. And surprisingly, I didn't realize it was only, 3 years ago that we spoke. It seems like an eternity, and the ride that I've had over those last sort of 3 years plus has been pretty exceptional and exciting. I've learned so much over that period. To get to where I've been able to get to now, which is fantastic.
So you started off as a discretionary trader, and because we already spoke, and I'm trying. I've got some pots in there, little potholes that I can't sort of piece together. So how did that work? How did that look initially when you were discretionarily trading?
Mm-hmm. Yeah, so I started initially trading my own money. So I tried to learn the basic kind of strategies of how to trade, everything from moving averages through to price action, the traditional kind of things that you need to learn, stops, targets, all that kind of stuff. What then happened was that I got to the stage where I actually started putting some of those strategies down into an automated environment. One of my biggest challenges when I was trading was the fact that I got very emotional about trades, whether winning or losing. I got emotional. I got stressed about it. I made bad decisions because of it. And I think that affects a lot of traders out there. And the second thing is that I found I was really inconsistent. When I was trading, I would have a good strategy and I would tweak and I'd tweak and I'd tweak that strategy to death, to the stage where it would no longer be a profitable strategy. And I couldn't remember, the strategy from the beginning that I originally had that made money. And that continuous drive to find the holy grail in trading, that perfect strategy, actually was killing me. The other thing is that profit was king. When I started, everything was about profit, low time frames, fast trades, turn over the money, make a lot of money. That's what it was all about. Well, what I had to do is I found that the emotion and the consistency was actually killing my ability to be a good trader. So what I did is I turned that into an automated format. I joined your course, actually. I learned how to use, at the start, something called FX Dreamer. That allowed me to put my strategies into a place where they were automated that I couldn't, in some ways, fiddle with and become emotional about. It also introduced me to back testing that allowed me to understand which strategies worked, which strategies didn't, what tweaks I can make them to be better strategies. And I built a number of strategies that work very well on a back testing basis. I then trialed them on small amounts of money to see if they worked live, and they did. And then it kind of expanded from there. I got to the stage where I thought to myself, look, I can carry on doing this. I can trade my own money, but realistically, I need more money, more money to be able to trade bigger amounts and earn more out of these strategies, because they work. And therefore, why not? Why not take them out there and share them with others and try and make some money out of it? The traditional route for me was the fund management route. I started up my own fund. I got it fully regulated in the UK under the FCA. It was an offshore Cayman fund. And I started to attract investors through word of mouth, through network, through referrals. I didn't go to institutions. I didn't market. It was just through people I know, friends and family, that came into the fund, where I was able to apply these strategies and demonstrate that they worked. And initially, to be fair, they were very fast trading strategies. We would trade tens and tens of millions on every trade, notional value. And we would do very well out of that. The challenge that came with that was the fact that a lot of the things that I thought originally worked within trading didn't work. So, fast trading, low time frames, the costs associated, the slippage you'd get on larger amounts of money would be such that realistically over the long term, you wouldn't be that profitable. And so that kind of understanding through running the fund put me in a really good position to build automated strategies that took into the consideration much more around risk. What's the risk of this strategy? What's the likely drawdown on open trades or even closed trades? What's the value at risk, as in the probability of losing more than a certain amount? Okay, what is the profitability of this? How likely is it on average that I'm going to win and lose? These kind of stats that were very important came into play when I was within that fund, which then took me on. And again, we're talking a 3-year period, which is quite short, but then took me on to actually thinking, okay, look, I can run this fund and I can carry on running this fund. And all those investors out there that want a return, could I do this in a better way? And what I thought is what I could do is actually take these strategies and actually license them out to other funds. And so that's exactly what I did. I created something called Sage Capital, where we basically build and license out our strategies to other funds. And from that, what happened was some of the strategies that I was licensing out weren't in your traditional assets. They were in crypto. So Bitcoin, Ethereum, at the time, Litecoin as well. And I got approached by a large regulated fund. In fact, one of the largest European regulated funds that trades crypto approached me and asked to license my strategies. And so amongst other funds, these guys licensed my strategies, and that went exceptionally well. For them, it meant that they got decent returns. They got well risk adjusted management. To the stage where basically they asked me to come on and run the business. So I started with them as CEO and became portfolio manager and ran their whole crypto business for them. To more recently, again, we've got them in a good state and a good automated way of running their fund. To me, stepping away and getting to the stage where Sage Capital is at the stage where we're continuing that licensing. But also in a different way, we're now making our strategies available to everybody. So we've taken 18 of our best strategies. One thing that really annoyed me, people would come to me and say, look, I want to invest in your fund, but were certain criteria you had to fulfill to be able to invest. You had to be what's called a professional investor. You had to invest a minimum of $100,000 to be able to invest. And it seemed really unfair to me because actually, if you look at the statistics out there, people who trade lower amounts, retail traders as they call them, statistically are likely to have a high probability of losing their money. I mean, brokers state 70, 80% of people lose their money. It just didn't seem very fair to me that people with 100,000 plus could get professional management, but people with less than that had to go at their loan and actually probably some of the most vulnerable. So I thought, well, look, why don't we release some of our strategies? We've got 18 strategies that we can release. These are professionally crafted, rigorously tested. Let's release them. Let's put them on a retail kind of subscription model and let people benefit from them. And what's interesting, actually, since we've released them, we've got 99% of people that are using our strategies have made money. And so that kind of plays around with the whole kind of theory of everyone loses to, look, actually this software helps you make better decisions and puts you in a position where you hopefully will make money as well. And so that's kind of my journey from being a non-trader through to learning how to trade, through to trading. I think I traded nearly 2 to 3 billion of other people's money through a regulated fund, which was my own, through to then licensing these strategies to funds, through to then running one of the largest regulated crypto funds in Europe, through to then going back to expanding our ability to trade and build these strategies and algorithms to try and help everybody. So there's a kind of snapshot of what's happened in the last 3 years, but it all started, Cam, from talking to you at the beginning and giving me a few steers as to how to build algorithmic strategies.
Brilliant. It's absolutely brilliant story. I mean, I love this because it's literally just sort of come all the way back from 2017. I had a look at some of the emails that Nathan had sent me, and I was like, this is crazy. I've just sort of answered a few questions here that you came through with after joining with the course, and to hear that the journey and what you've done since then is quite amazing, and it's a big lesson for a lot of the guys who are members of the Robot Builders Club now, and a potential avenue for them to then scale what they're creating in most cases for themselves. So this is fantastic. Now, you obviously dove into crypto quite a bit. I mean, do you want to sort of give us, and this was, 2017 was when it was going through that bull run to 20K, is that right? And then into 2017, somewhere 2018. And so how did back testing and coming up with strategies that worked on crypto at that time go about? Because there wasn't a lot of data, right? There wasn't a lot of historical stuff.
No, exactly. I mean, realistically, any kind of bad testing you did at crypto at that time was really invalid because the quality of data you got at that time was pretty poor. I mean, the way that we started was actually using some of the strategies that we knew worked across multiple assets. So, we had strategies that worked very well in FX, but actually you could pick up those strategies and apply them to gold or oil or indices or whatever you like, and they would still be very effective. So the learnings that we'd got from those strategies, we felt that we could apply them to crypto pretty well. I mean, one thing with crypto, which is really nice compared to most other asset classes, is the fact that it trends very, very well. It's very volatile, and it traditionally has been very volatile. Certainly around 2017, 2018, it was incredibly volatile. These days, it's not so volatile. In fact, I think things like oil can be more volatile than crypto these days. But what's nice about it is you don't get a lot of it sounds strange. You don't get a lot of market manipulation. With some of the other asset classes, you've got very large institutions that are coming in and they are, buying up the liquidity or using the liquidity to their advantage. Within crypto, it's not really held by institutions. It's held by a diverse population of people, which allows or actually restricts that manipulation to the same extent. So you've got a market that trends very well. Yes, it's volatile, but you can manage that volatility. And so the stage one in 2017, it was saying, okay, what can we use that we believe that could work in these kind of markets? We know it trends well. We know it's volatile. What algos have we got available that could work effectively in that? And to be fair, and at that time, it was a bit of trial and error. So we didn't have the perfect strategy to apply. These days, it's very, very different. But those days, it was that time where it's like, okay, bit of discretionary, bit of a proper professional fund management, good risk management in place. Let's make this work. And unfortunately, we were very successful. Nowadays, it is different. You do have data. You have good quality tick data you can use. You have a much better understanding of the market. You understand much more around the who's behind that market from the perspective that I don't believe you will get the same levels of volatility. It still moves up and down. I'm not saying it's a dead cert to invest or even go short. I'm just saying that it's a different market. It's a much nicer market to trade. It still trends very well. Yes, it's more volatile from the point of view you need wider stops and stuff like that. But it's one of our favorite markets. And from a trading and algo perspective, it's by far one of the best markets because it's not got the same level of manipulation that some of the other markets have. High frequency trading, that kind of stuff isn't to the same extent as some of the other markets. And therefore it sounds strange, but it's actually a friendlier market in a lot of ways, certainly from an algorithmic trading perspective.
And then I don't do a lot of, I don't do any crypto trading, but I looked into it just a few weeks ago, and what I noticed was like these sort of quite wide spreads, which I'd have to try and tackle. I mean, how do you deal with that when these algos are trading?
Yeah, you do get wide spreads. Unfortunately, you have to shop around as well. There is a real difference between different brokers. And also, it's a different world from the perspective that some of the brokers trade very differently to how you would traditionally trade and how you put that money on the market and how you put your stops. And so, unfortunately, it's a bit of a learning curve of understanding how to trade it. Yeah, you have to be careful. One of the challenges is something like, for example, Bitcoin or any of them. A lot of people have a preference to long hold. Because they're long holding, it means the broker's not making money on the continuous turn, which means they have got higher spreads. But the thing that really catches you out is actually the overnight interest. So a lot of retail brokers will charge an overnight interest, which is very high. Some of the other brokers out there that are very crypto focused will charge you interest every 8 hours, and they can change that interest rate whenever they like. It's not even static. You're working in a market that's not regulated, and therefore you need to be very careful how you trade it. And hence why people come to a fund like I used to run because it's professionally managed, or they would use the kind of Sage Capital strategies because it's much more familiar with that market and manages it and gives you that edge. But yes, you have to be careful. However, there are some massive moves. Recently we've seen move from sort of around circa 10,000 to it's just tapped and pulled back from 20,000. I mean, that's doubling your money there. And so, yes, you may have paid slightly higher on your spread, but actually that kind of move you're not going to get in any other market. Bitcoin has been the best performing asset of all time, without the fact, as in it's gone up from its beginning days by 9 million%. I think Bloomberg was saying it's ridiculous. And those that got in the beginning have obviously made a lot of money from it. So it's an exciting asset. And I think actually as an asset class, it's something that's going to continue to grow because if you look at the fundamentals around it, if you look at what's happening in the economy, particularly with things like COVID and the fact that a lot of we're going to see a lot of probably liquidations across companies as time goes on. It's actually an asset that's free of central banking. It's something that actually is very, very exciting. From an inflationary perspective, it's exciting. A lot of the big funds are now going into it. Treasury is even starting to hold money in Bitcoin. This is the stage where actually, if Bitcoin's going to go, this is probably the stage, from a fundamental perspective of being the best it could be. Now, I'm certainly not advocating or recommending that you buy or sell. I'm not giving any kind of financial advice, but you've got to look at the overall kind of position of it. It's more secure than it's ever been. Even the banks, central banks are talking about some form of cryptocurrency. Now, it won't be Bitcoin. It will be, a number of other different kind of tokenized currencies pulled together. But actually, it's a much more effective way for them to run a kind of central kind of banking kind of currency. And they're talking, Bank of England's talking about, there's a number of other banks that have been talking about it. And, again, with Facebook, you've got Libra. It's a stage where that has not been, it's not released yet. There's challenges, and I can understand why there's challenges around it, because there are, the whole kind of crypto world could cause an issue to the kind of way that the countries are run in some ways. However, when that does come out, and I'm sure it will, Bitcoin again will benefit from that. Even though it's not Bitcoin, it doesn't matter. It's validation for the market, and the market will probably rise. The challenge is there's a lot of people are very excited about it. A lot of people want to come into it. They're not used to the fact that you literally in one day could make or lose 10, 20% of your account, and therefore you have to be careful how you trade it.
Nice. Brilliant description of it. I used to ask the question actually on the show to a lot of the guests, especially when the big run up to 20K happened, and people were sort of umming and ahhing about. 50% said it's going to go to the moon, and the other 50% said no, it's not going to happen. It's just going to completely die at some point. Yeah. So it sounds like now it's more there's more facts and stuff around that shows it could potentially go to the moon.
Exactly, and you've also got to look at the big kind of institutions, and they're kind of they obviously make price predictions and they make recommendations and all of that kind of stuff. And if you look at them, their price predictions on things like Bitcoin are ranging from sort of 65,000 up to 140,000, and these are big institutions, and so when you look at that, there's obviously some interest there, and you've got to consider the stability of it. Now Bitcoin is just the absolute dominator in this market, but you've got others like Ethereum and stuff like that. The business case for Ethereum is much stronger than, say, for example, Bitcoin, and therefore as a global tokenized way of potential currency for the future, if it isn't even a currency, and making money, it's an opportunity that people should seriously consider as part of their portfolio. Even a 5% holding of Bitcoin would have outperformed nearly every other asset class out there. So it's one of those things which, if you're slightly risk averse, maybe have a small part of your portfolio. If you're up for the ride, then potentially think about your position of whether you trade it as a core asset.
And just going back to your strategies that you've managed to create, I mean, so how many have you got now that you're running that are profitable?
Well, so the ones that we have in Sage that are available for everybody. So they're not. We have other strategies that are only available exclusively to funds because of the commercials around that. But the ones that we run within Sage, which are on a subscription basis, I think it's like $99 for 18 strategies, which Montana is pretty cheap in the market, and you get a whole kind of risk management system around that as well, and you get some education on how to build portfolios and correlation. And so we try and do it in such a way that people can actually make money. So out of those strategies, if you look at the live trades, I think we've got one or maybe two strategies that haven't made money in the last couple of months. But they're down like 1%. Whereas you've got other strategies that are up, 9-10%. And what we do is we risk adjust everything. So each strategy is on a max drawdown over the whole period of testing of about 5%. So some people will join strategies together. So they run multiple. They may say they're going to run 2 Bitcoin, 1 Ethereum, 1 gold. And as a portfolio, it's relatively low risk. I made in my portfolio 27% last month with a 1% drawdown. So, these are not your normal kind of retail strategies. They're not the strategies that you can have a 30-40% drawdown. And yes, you might get a 50% return in the month. These are strategies that are very well risk managed. And we encourage that through the education we provide and the strategy we have. So again, if you look at the overall customers from all the people using it, there's only, there's about 1% that are down overall. Overall time, as in, there's only one person and they are down a tiny amount. It's about 1% they're actually down, and that's more to do with their account size and minimum broker minimums and stuff like that, rather than actually the trading strategies themselves. So we've had a good run. The good thing is that the Bitcoin has gone up, and we do trade Bitcoin. But actually, although a lot of our strategies are long only, we do have short strategies within Bitcoin. We do have long and short in Ethereum and gold. Strangely enough, gold is actually the best performer. So if you look at this year, gold has actually outperformed Bitcoin. I mean, not so much recently because it's obviously doubled in price, but from an algo strategy, gold has been amazing, absolutely amazing. 15 years worth of backtested track, live data on that. Gold last month, we run, I think it's about 5 or 6 gold strategies, maybe 5, and all of them are up sort of the 8-9% plus mark with very, very little risk. And so that's, so people do literally, they subscribe to those, they come on, they link in their broker account, all done online, 24/7 in the cloud. They manage risk, they choose which strategy they want, chop and change, and away you go. And so it's a good way of in some ways taking what we've learned and trying to help people to make money out of this, make better decisions in what they do.
And just sort of, I mean, like we usually get a lot of manual traders on here. So to sort of put it in manual context, I mean, what kind of things are behind these strategies? What are you looking at from, or what are they using to execute trades and manage risk and all that sort of stuff?
Yeah, so it's quite interesting actually, because they, with algo strategies, none of these consider news. So they're not news-based strategies. They are very technically focused. They all have the usual kind of stops, targets, entry, points. I guess some of the things that they do that maybe are non-traditional. I think I don't think there's any of them. There's very few of them that use fixed stops. So they all have stops, but they tend to base their stops based on market volatility at the time, and so they position size based on those stops. But it's done on average kind of volatility, average to range or whatever, rather than fixed stops. A lot of them have timings put into them. So rather than just again getting into the market, waiting to hit your target, what we found that realistically there's kind of a kind of like a window of perfection, and if you are within that window, you make maximum profit. If you move outside that window, your profit starts reducing, or your likelihood of profit starts reducing. So a lot of them have, it trades for X amount of time and then it closes, which is again slightly different to some of the more kind of traditional kind of technical analysis. Now there are technical indicators within there. There are a number of different ways, from, we don't tend to use things like moving averages or some of the more common kind of moving averages or MACD or stochastic or anything like that. None of those are really within the strategies. We find better technical indicators that work better for us. I'm not saying that the others don't work. For us, they just work better. For example, things like counting the channel nozzles and stuff like that. Surprisingly, as a discretionary trader, I wouldn't really use those, but actually in auto trading, they work very well, particularly in crypto and how we use those. So there's a number of different things that we use in there. Things like, for example, break even. From my experience, break even, and again, it's controversial, but from my experience, from all of the testing, and bear in mind we build millions of strategies and only a handful of strategies actually get it out to market. Break even, in my view, doesn't really work, and so we don't have a break even option, although we may on occasions use things like trading stops as well, just to manage that risk on the market. The key thing is around portfolio management. So it's not about having one individual strategy. It's saying, okay, I want to take I want a decent return from the market, but how do I do that with a minimum amount of risk? And the way that we would suggest people do that wouldn't just be simply taking one strategy. It would be taking a multitude of strategies that are uncorrelated or low correlation, not completely uncorrelated, and having a diversifying the risk across those. And I think if you combine each of those things, you get that real edge. You get an edge of, okay, I can make, as I did, 27% last month on a risk of relatively low drawdown. My maximum exposure, if it all went wrong, was about 4.5%. So if every single strategy, and bear in mind each strategy is independently developed, fires and loses simultaneously all at once, that's never happened ever in the past, then I'm going to lose 4.5% of my account, which in most cases is relatively low anyway. But instead of losing that, I made 27. Previous months, it hasn't been as high as that. Previous months, you're talking sort of 8-9%. But again, you can double your risk. You can choose, okay, look, I'm quite happy as an individual to take a bit more risk. I'm happy to move that average from 4.5 to 9. So double the risk, times it by 2. Guess what? You're likely to get double the return. We don't do that for professional funds, but as an individual, that's not our decision. You have the access in the system to switch it up and switch it down and do what you like. And that's what we've made available to just try and put people in the right direction, I guess, of what they do and how they manage that risk.
Nice. And sort of the frequency of these trades, how often can people expect to see a trade heading their chart? Because I know a lot of people who get robots and stuff, they go, oh, like, it's not traded yet. And it's like, when did you put it on? 5 minutes ago. Okay, well, it's going to take a day before you're going to see anything. So what about frequency?
They're really dull. They're really dull. As a discretionary trader, and bear in mind my background was discretionary, as in I wasn't a trader originally, but when I started trading, it was discretionary. You trade a lot, and it's, I was going to say it's fun. It certainly gets your adrenaline going. But on these things, per strategy, they average about 7 trades per month, which again goes against a lot of what traders would expect. They want that kind of high frequency. They want to be in the market. They see the market moving and they're like, oh my goodness, I'm not in that. I could have been in that kind of FOMO. But time and time again, actually, it costs money to enter the market. When you're in the market, you're at risk. What I want to do is I want to be in the market when I got the least risk, when I got the best possible chance of making money, and I don't want to pay the broker a load of fees, and I don't want to get slippage because that's going to cost me as well. So how do I do that? Well, realistically, I trade slightly less. I have my trades on the market for slightly longer, and that improves my the ability to make profit. And when you add in things like compounding over time, you're going to make a lot of money. I think a lot of traders think too short term, and that short term puts an enormous amount of stress and pressure on them, which makes them trade, not as consistent or perhaps not even as they'd like to. They look back at their trading log and they're like, well, it'd be fine. I'll do it again next time because I know what I did this time. But they never do. It's so hard. Whereas actually, if you remove some of that pressure, you go slightly long time, slightly less trades, costs go down, probability of making money goes up, and guess what? You feel great. And to be fair, you can go to the gym and not be watching your screen from 6 a.m. to 10 at night kind of thing, and so it doesn't make a difference to your lifestyle, as well as, in my view, your profitability. So these things, 7 times a month on average, you'll probably be trading 4 strategies. So to be fair, you're still on average taking a trade a day.
Nice. Now, what do you think made you different from like other people that have taken the course or the average person out there? Do you think you had any special traits or any special experience that headed you in this direction and made you think like this?
Well, okay. I mean, everyone's different, and they obviously have different traits. I mean, the kind of backstory of me, to be fair, I was very, very entrepreneurial. I started my first business when I was 8 years old. I ran professional audio, national magazines when I was sort of 12. I had multiple businesses that I built up and sold. It got to the stage where I had one business which was developed and sold within 6 months, which is super quick. And that was sold to a very large global consultancy firm. I became a partner there. I ran the data analytics and intelligence team there, and we got involved in some really interesting projects around predicting future events. And that kind of helped me to get into this. The ability to use data to predict future events, kind of works pretty well in the financial markets. Well, that's what I thought. And then I started and realized I actually knew nothing about trading, and all of those kind of things that I'd learned realistically probably didn't apply. And actually I started again. But that kind of entrepreneurial spirit and that kind of business mindedness, I think really helped to focus and I always feel that in my life when I've done things, I've always got to the stage where things are just ready to explode, to become really good. And I kind of given up because it's just got too hard. And with this, I absolutely wasn't going to give up. I was absolutely going to learn everything I could. I was going to talk to as many people as I could. I was going to, do as many courses as I could. And clearly there's a lot of, so-called gurus out there that teach you stuff that maybe never traded themselves. But to be fair, there's always something there. There's always a little nugget I could pick up and I could learn from. And, just being inquisitive and using that inquisitive nature to get information from people so you can learn that little bit extra. And then, I was, from my perspective, I didn't want a discretionary trade all my life. I just found it, super exciting. I can remember I was on a trade where I entered the market and I got into the market and I was in the market for probably a second. I mean, it was that quick. Honestly, that felt like an eternity. It was unexpected. I think I made, on this particular trade, it was sort of fun. It wasn't my own money, but I made about 60 grand in that 1 second from that one trade. But I can physically remember, my hand was literally shaking. It was like this. And I realized at that point that the extreme stress that this is going to cause me is such that I just don't think this for me was my long-term kind of way. And so for me, that's why I wanted to get into auto trading. And for me, because of my business entrepreneurial background, I understand that if I build a great algo, not only can I license it, it has value in the future. And as a company, you get a valuation of your company, which can be significantly greater. So I can carry on trading. I can use my own algos. I can get this other income from other sources. And it kind of worked very well for me. And that was my thinking, which I don't know if that's different or not, but that was my thinking. I wasn't just building a strategy that only I could use because, frankly, I didn't have enough money to make it, to make it work at the time. Now, I'm clearly three years down the line, which is ridiculous. And again, I thought it was much longer than that. 3 years down the line, and I'm in a good place. As in, I've run 2 very large funds. One, again, multi-asset, mainly FX, 2 crypto, both regulated funds, traded, again, literally billions in other people's money, built an array of algos, in a bank of algos that we license out. It shows you can do it. I didn't come from a trading background. Anyone can do it. It's that kind of, desire to learn and learn and take on these things as much as you can to learn and build. And and just drive forward. That ambition, that belief, I guess. That tenacity. I don't know how you describe it. Maybe that's not normal, but for me, this is what I want to do. I want to be in the position where I could be anywhere in the world, trade anytime, be with my family when I want to be with my family, rather than being stuck to a screen or even stuck to my kind of day job, whatever that may have been, kind of thing. That tenacity has driven me through to where things are now. Clearly along that journey, it's not just about auto algos. You have to learn about the market. You have to learn about how the market is manipulated. You have to learn about, the best ways to, the reality is that a lot of people are tagged by brokers. They know what you're trading, and therefore you continuously entering the market on market orders. At some point, you're going to get burnt because it's a place where they can lose money. Entering the market on pending orders is less aggressive. You get much better fills. Simple things like that through to understanding the game as the greater game, understanding the fundamentals, understanding technicals, understanding what's going on in the market that could drive an asset class forward. Just talking to good people, basically, and that has helped massively to build up my knowledge and my capability, I guess.
So what steps would you recommend somebody take if they were going to try and emulate the success that you've had? What would you recommend they do?
Well, I think there's a number of things. I mean, again, I think it doesn't matter whether you're auto trading or discretionary. I think that the first thing is that if I look at really good traders, and I know a few really good traders, only quite a few good traders. If you look at their strategy, you'll be surprised how simple it is. And so that's the first thing I'd say, is that good traders trade simple strategies. And I think that's the first thing, is to not overcomplicate your strategy. If you're trading technicals, having 5 different indicators on your screen probably is not going to give you the information you need. You need to probably have less indicators and just go with it. And over time, prove it. But that's what I would do. I'd really not get too caught up and think that you need to be complicated to make money. Simplicity is good. I think the second thing is that from a mindset perspective, I think your mindset has to be one where you need to stop thinking about needing to get rich today, tomorrow, this week, this month, because if you get this right, you will become very wealthy over time. But I think a lot of people force themselves into a box where they wrap themselves with some kind of time constraint, which means they trade with much larger risk than maybe they should. They are less consistent than maybe they should, because they feel under pressure. Maybe they've had a really good win, and because they've had that really good win, they've tasted what success is like, and they want to carry on that, and so they take more risk and perhaps even get a little bit more maverick, which eventually will end in failure. I mean, it's still to this day, a broker will the life expectancy or the account expectancy for a broker is about 3 months. So most people will lose all their money within 3 months when they start trading. If you can get your trading system right, if you can get your risk right, focus on risk. Don't focus on profitability. Focus on risk, because if you get your risk right, you can double your risk, and therefore you will double your profitability. But the key thing is that your capital won't be eroded. And I know it's a message that has been told, time and time again, but it is absolutely critical that people get their mindset right on risk. Because also, if you ever want to get to the stage where you do want to build auto algos and you do want to sell to funds and stuff like that, then risk is the key thing. The first question they'd say is around risk. What's your maximum drawdown? What's your average loss in dollars? What's your average win in dollars? What's your recovery rate? These kind of things will come out. It's not about what's your profitability, what's your win rate. None of that will come out in the initial stages. And so risk is the key thing. And that mindset of time, if someone makes a small amount, say for example, they got $10,000 account, and they double their account in a year, which is pretty good going. Okay. Now with compounding, it's not just doubling your account, because you're going to be trading the money you make every time, which means it's significantly more. But in year 2, if you put all that money in, the kind of money you can make is so incredibly large compared to where you started without taking huge risk. It's just time. That's all it is. It's the fact is that you've given yourself more time to make money. And that is, I think, the biggest thing that people don't truly recognize, that don't make time against you, put it on your side. Risk and time, I think, are the key things that you really need to consider. Yes, you do need a good strategy, but actually, if you've got good risk management and you understand that this is a slightly longer term game than just a month or so, your strategy doesn't even have to be that good. You can still make money with a strategy that isn't the best strategy. And so many people go out there and all they're focusing on is strategy. I want to build the best strategy. I want to build the best win rate. I want to do this. I want to do that. It's like, it's not you're wasting your time, but actually you could be trading. If you have good risk management in place, and again, you're giving yourself time with not lots of capital exposed in the market, that's how you're going to learn. Because the quickest way to learn is being bitten by losses. And if they're small, it's not a problem. You don't feel psychologically drained and you feel still in a place where you can logically put that next trade on. Whereas actually, if you lose a lot, honestly, at that point, you need to stop trading for a period of time because you cannot make good decisions at that point. And so just it's hard because I know when I started, it's exactly what I didn't want to do. I wanted to be in the market. I wanted to trade as much as I could. I want to make as much money as I could. And it's only through the feeling of losses and give you an understanding losses, right? I must have lost when I first started trading, when I got money. I mean, I would have lost, hundreds and hundreds of thousands. I mean, we're not talking small amounts, hundreds and hundreds of thousands. I would have lost when I was trading. I had access to money, so through the fund, and we lost a lot of money, through what we did. And it's only through that reality check of what am I doing? This is madness. And that in some ways I've been burned and I can see what it's like. And it's that kind of, don't do what I did. If you can learn from this now without taking that pain, that actually you can make money, keep things simple, keep your risks right. Don't worry about time. Allow, if you want to make money, give yourself a year to make money. Don't say, oh, I've got to make money the next week. And if you make a win, don't take it that's going to be it. I was explaining that I've got a strategy that is that's 97% accurate. Okay, it's traded 14,000 times over 15 years. I mean, this is like an ATM. People would say, it prints money. The challenge is that it even though it's 97% accurate, it's 3% inaccurate. The risk to reward on that particular strategy is 1 to 11, which I know people are going to think that's nuts, but actually you can still make money out of that. The problem is out of 14,000 trades, you've got 400 odd trades, which are losers. Now, if those losers start adding up in a row and you're at 11 to 1 risk, you're going to lose money. Now, to the average kind of person, when they look at that, they would love that strategy. 97%. I mean, I traded that strategy and I think it was 3 or 4 months I didn't have a single losing trade. It's like, wow, this is amazing. I can easily feel invincible with that strategy. And then I remember with that, actually, I lost pretty much all the money that I gained within 3 or 4 months within a day because of that issue. So what I'm saying is with a strategy like that, don't worry about your win rate. Think about what is your potential risk. What is the probability of losing this money? What's the potential? How consistent can I be on this? Because again, if you can make small incremental profits, it adds up unbelievably over time. And if you do, to be fair, you can start licensing. You can make a kickback on money from that as well, rather than just trading as well. So, that's what I would say. It's probably quite a long answer, but it's something I'm passionate about. I just wish I could get that message across that time is your enemy. Don't think short term, honestly.
Now, what about like for the next month? If somebody was going to go out and master one thing for the next month, what would you recommend they go and do?
Well, it kind of goes on to the conversation we had. I mean, if you haven't explored crypto as an asset class, then perhaps that's something that I would consider doing, just purely because it actually trends very well. It's quite a nice asset class to look at from a technical perspective, because you don't have the same fundamental impacts that you do on some of the other markets, which is quite nice. And so I would definitely consider that. But if we're talking specifically about what you do within trading, I would consider looking at your trades and trying to understand what kind of risk exposure you've got. What is your maximum drawdown that you've ever had? Okay, what is your average drawdown? This is per trade. Let's say, what is your average win rate, average loss? But also one other factor that I think would be quite interesting is to look at your days to recovery. So if you've had a losing trade and it's come off that peak and you've had a drawdown, how long does it take you to recover to get back up to that peak? Because if you start analyzing your trades more like that, in fact, if people were to go to the Sage Capital website, sagecapital.co.uk, there's a section on there that says performance, and there's 18 different performance reports on there, which is our strategies. It doesn't matter if you're not going to sign up to Sage, but if you look at those strategies, there's some key numbers on those strategies which you should probably look at your own portfolio. It doesn't matter whether you auto trade or whether you're discretionary. Look at those kind of stats and see how you compare to those strats, because you might find you've got some strategies there that you would consider to be underperforming, but actually long term they may be really effective and actually very valuable to you, or perhaps even to anyone else. And so I would really go back and look at your trades and look at the numbers. Personally, if you're discretionary trading, I would look at ways to understand whether that style of trading is going to work long term, and I would do that by building some kind of auto and back testing that through a computer, not manually, because you'll get what's called trader bias, where you're completely blind to the losers because you want the outcome to be what you want it to be in some ways.
It's a good answer, Nathan. Probably not the best answer you could have given. I would have thought you would have said, go and do the course that Cam's created to learn how to automate your strategies.
Yeah, well, to be fair, people have got already validation of that. I mean, 3 years to 2017 to 2020, and complete change around. I was going to say. I was thinking he's going to say do the course. No. Anyway, right, we're just going to jump into the quickfire round and give the guys a bit of a summary of everything. So, how long did it take you to go from trading newbie to consistently profitable? Well, I think there's different levels to that. I think if you've got smaller accounts, it took me from newbie to be consistently profitable, probably took me 18 months, I reckon. However, when you're dealing with larger accounts, it's a whole new ball game, because you can't get large accounts through the markets. There's not a lot of liquidity at the price points you want, and so to get to the stage where you're profitable trading larger amounts, it took a little bit longer than that.
What's your favorite entry setup?
Entry setup. I personally quite like. I quite like scaling in. So I would quite like a pullback as to one entry, and then the breakout to confirm the entry as the second entry. So again, not something we would necessarily do in an auto trading, but on a personal level. And personally, it's funny to admit this, actually, after all this, I still quite like moving averages. I just do. I know they lag the market, but personally, I think that they're quite a nice way to give an understanding of trend, to give you the pullback into the moving average, to get your confirmation to buy out of that. Good dynamic levels of support and resistance for your stops, and then breakout trades for your second scale. So, but that's just on a personal level. We certainly wouldn't use those necessarily in the complex kind of strategies that we develop, but I like them.
What about strategies to exit or manage trades?
Sorry, I didn't know. What's that?
Oh, strategies. What strategies do you use to exit or manage trades?
Oh, okay. Sorry. So it does vary. They vary per trade. I mean, as I said to you before, if you're looking at the kind of strategy we would use from a stop perspective, we would tend to use more volatility based rather than fixed stops. From a target perspective, we'd equally perhaps look at volatility as well. So if the market's particularly volatile, then you're looking for a wider stop. If it's a close range, obviously, then you're looking for a nearer stop. There are some nice predictive ways, actually, that you can certainly do your targets and pick points where the market moves. And that, I can't really go into the detail here, but it's, if you look at the general kind of market cycles and get into things like understanding the kind of individual moves of those market cycles, the waves you get on any time frame, they give you a very good prediction of where that market's going and the kind of target you would have. So there are different ways. I may use trading stop. There was an example where I took an account when I very first started from 300 grand to 5 million in 1 year. That was actually based on a daily chart. It was on based on a 3-bar break in some ways, with the trading stop 3 bars behind, as in the break of the 3 bars, with a very simple moving average behind it, and that made it literally made, took the account for 300 grand to 5 million in 12 months. In fact, we took the account for 3 million to, I think, 1.8 million in about 10 weeks. And so again, perhaps it's a bit lucky. If you use that same strategy now, perhaps it wouldn't work, but this is the thing, simplicity. And on that one, there was no target. We just let the market run, and basically the stop took it out. So different strategies do different things. And again, blending strategies gives you that diversification, which means that you can be in and out the market at different times, which in some ways hedges that risk as well.
Do you have any recommended trading book or resource people could check out?
Unfortunately, I'm probably going to give you the same that everyone has ever said. I mean, personally, Trading in the Zone was a big book for me. He did. I know he had unfortunately the guy behind that had a heart attack and whatever. But he did an audio book as well around that, which was a live seminar, which was really interesting, talking about probability of trades and I enjoyed that book. It was a good book.
Douglas.
And then the interview books, Wizards and stuff like that. Really enjoyable book. Good things to learn from each of those.
What's your preferred broker and trading platform?
Well, again, unfortunately, it depends on which asset class you're trading. We actually use Pepperstone, and we use Pepperstone for our strategies, for our retail strategies, mainly because the spreads are low in crypto compared to a lot of others. They are one of the largest brokers. They're regulated. There's all those kind of things that we would do that. Also, when testing, to be fair, when you're talking auto, different brokers give you a bit different execution, and we found Pepperstone gives us the best execution for what we want. Obviously, if you're trading a large fund, it's slightly different because you deal with prime brokers.
Brilliant. Well, look, before we wrap up, what's the best way for the traders to get hold of you?
Well, if they want to have a chat or have a look at the strategies, the website is sagecapital.co.uk. Have a look at the website, see what you think, and then there's a support button on there, which if you want to message me specifically, click the support button and mention me, and I'll come back to you straight away, and we can have a chat or whatever. But that's the best way to connect.
And guys, as I mentioned, we did do a probably an hour and a half long Q&A with Nathan just before this for the Robot Builders Club members. So if you want to find that, you want to check that out, you've got to go and join the Robot Builders Club. Come on board and we'll teach you how to build trading algos like Nathan does. Right, so big thank you to Nathan for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Nathan in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success.